afternoon, everyone. Welcome to the Real Deal South Florida at Manor Wynwood. The energy in here is remarkable, and there's a real buzz in the air. Coming off a major day in the U.S. with yesterday's elections, there's plenty of conversation around how the political landscape might shape the future of our country, business, and of course, real estate. Looking around, I see people making deals, strategizing for what's next, and diving deep into key topics. Today is clearly about more than just discussing trends, it's about setting them. Founding partner of Manor Park Ventures, an innovative multifamily housing developer at the forefront of strategic real estate investment. Marc, it's fantastic to have you here, and we're grateful to get your insight on what's shaping up to be an exciting first day at the Real Deal Conference.
Thank you very much, and thanks to The Real Deal for having me. And Madison, it's great to see you again. Definitely feel the tremendous energy here this morning, especially coming off I'd say one of the most historical elections in our nation's history. And just seeing everyone here hitting the ground running shows, I think, how resilient our industry is, and see so many familiar faces and people talking deals, and it makes you feel good. And my partner, Roger Black, and I have been in the real estate business for over 20 years, and we felt like we've found a pretty decent formula at Manor Park to navigate the environment we're in right now. So happy to be here, and it's good to see you again.
Awesome. So Marc, talk to me a little about how political changes are impacting real estate development in the Southeast. Are there any key challenges or opportunities that you're seeing?
Well, I think, again, with it being the day after a major election, I think politics is on the forefront of everyone's mind. And I definitely think the political instability will have an effect on what we're doing, which is primarily multifamily development along the East Coast and actively in the Southeast. And I think we've already seen some of those changes, from zoning laws to building regulations to tax policies, a la opportunity zones and other areas. And the way we protect ourselves against that and the way we attack that is by fostering really deep relationships with the municipalities in the areas and markets where we develop. So we're fairly sheltered, or at least we know we're prepared for those policies. And I think everyone here would also agree that those policies are a little easier to swallow in the Southeast and certain markets, as opposed to markets up in the Northeast.
Right. So obviously everyone is talking interest rates, and we know what a big role they play in the real estate financing. So what strategies would you, Marc, recommend developers and investors to handle the potential volatility in interest rates?
Well, I would bring Leo back up on the stage to talk about it if he was still here. But no, as multifamily developers, we're constantly, monitoring interest rate volatility. And I think right now it's really hard to, predict where interest rates are going to go. I think everyone would agree we're in a fairly challenging and uncertain environment. And at Manor Park, we use a leverage-free approach to acquisitions. So when acquiring entitled land, existing properties, acquiring those through all-cash transactions really reduces our risk to that interest rate volatility. And then at the same time, we're able to spend conservative pre-development money to get ourselves to a point where we can bring in a larger institutional partner that can foster that relationship with the lender, as the previous panel was speaking about, and share some of that interest rate risk, with us.
So you just highlighted how Manor Park operates as more of a boutique firm. Can you touch a little bit on how that family office approach gives you the flexibility to operate differently compared to larger real estate companies? Yeah,
well, my partner Roger and I feel that the smaller shops are actually going to have the advantage in this market. And, at Manor Park, we're able to do that by, making decisions very quickly, which I think you need to do in this market. And then you also need to have a extremely conservative approach when it comes to looking at opportunities. You have to protect your downside, and that's how we look at underwriting. If you're looking at things at a 20% discount to stabilize values and you're comfortable with your basis, there's not much that can go wrong going in. So I think a conservative underwriting approach and a quick decision-making process gives us the ability and puts us in the position to, bring really, really attractive deals to larger institutional partners that can't move as quickly as us.
That's really true. So with Election Day now behind us, how are you thinking about Manor Park adjusting its strategy to respond to any market shifts that may come now as a result?
I mean, to be honest, I don't think we change our strategy at all. I mean, I think the election is impactful. People think they have to shift and be contrarian and move towards what's popular. But, at Manor Park, we really stick to our strategy, which is primarily multifamily development, but we're also Manor Park Ventures for a reason. We can play anywhere in the cap stack, and we can play across all asset classes. Obviously, multifamily development is where we, I think, thrive, but given the small boutique nature, we are very versatile when it comes to that.
So Marc, you touched a little on finding the right opportunist partners, and it seems to be a key part in your overall strategy. Can you share with us an example of a project or a deal where the right partnership really made a difference?
Yeah, well, partnerships for us, I think, is a wide-ranging term. I mean, there are deal partnerships where joint ventures and, co-GPs and partnership agreements for development. And, we like to structure those pretty tight. And then you also have to put together the right development team, which I think is where we really stand out. We have great relationships with contractors, architects, engineers, all in the local markets where we're doing deals. And that's what gives us the leg up on the competition. And I think in general, our partnerships are always helpful. We look at everything as a partnership, and it's always worked to our advantage in the good times and the challenging times, I would say.
So Marc, I know Roger here plays a key role in navigating challenges like the shortage of new construction permits in the Southeast. Are there other obstacles you feel Manor Park is working to overcome right now?
Well, I think that's a perfect answer for what Roger tells me every day, which is this is a full contact sport. But, I think you're always overcoming obstacles and challenges, especially in development. I mean, we're in a putting out fires business, and that's what we do at least once a day. But I'd say the biggest challenges we're facing in the multifamily development space specifically right now, given the election, would be obviously insurance costs are having an effect on underwriting. And I think construction costs are on everyone's mind right now with the election. Are the tariffs going to come back? Are there going to be supply chain demands? Is that going to disrupt development timelines? So I think there's a lot of challenges and obstacles to get over. They're deal specific, but you're facing those in any market, in a good market, a small market, but they're highlighted right now. But we feel like we're very well prepared to do that.
So I know the Savannah project is standout in terms of innovation and efficiency. Could you share some of the best practices you applied and how you think they're changing the game for multifamily developments?
Yeah, you mentioned Savannah, which is a magnificent market. We identified it as a really burgeoning area in the Southeast with significant employment growth, population growth, and I think the larger aspect people don't think about is the cost of living in these areas is a lot more affordable, and that's what's really driving the rental demand. And in Savannah specifically, we've really focused on selling the amenity package. I think similar to the condo space, there's a lot of resi brokers here. People are buying the amenity package in buildings as much as they are the units. So we focused a lot on that in Savannah, and specifically have put in some pickleball courts, which is Wynwood, become an enormous amenity, more outdoor area, and a lot more areas to serve to the residents who like to live healthier lifestyles, outdoor lifestyles, and just fostering sense of community. And that's kind of where we're highlighting the amenities.
Awesome. Pickleball is definitely a new movement here, for sure. So we're running out of time, but thank you so much for your time and insights today. Really super valuable, and it sounds like we all need to think in a creative and constructive ways on how to navigate through some of this instability. And thank you for helping us think from some of these solutions.
This is extremely exciting, the turnout today, and I think, again, it just is a testament to our business and how resilient we are and how much we push forward and how much opportunity there is. And I think you just have to stick to your strategy, and we do that at Manor Park. And you'll be successful in this environment and in this market. And thank you, Madison, for taking the time. Great to see you again. Thanks to The Real Deal.
Thank you.